Good evening, everybody. Welcome to Verified Investing Live. My name is Gareth Soloway, Chief Market Strategist and Master Trader here at InTheMoneyStocks.com. I hope everyone had a wonderful weekend as we turn our attention back to the markets on this Sunday, December 12th, 2021. I think the big thing that's standing out for me right off the bat has to be the Federal Reserve meeting, which is Tuesday and Wednesday of this week. The reason it's so important, as I explained in the daily analysis video on Friday, is that it basically is a determination of, is the Fed going to keep the tapering where they said it? Are they going to make it a little bit less, stringent, or are they going to actually increase the tapering itself? And I think that's the big kicker here, is that the markets are starting to get the sense that the Fed is looking to potentially increase the amount that's being tapered. Now, again, depending on how much they increase it, that will be very, very big, right? So again, if they all of a sudden go from $15 billion a month to $30 billion a month, the tapering is going to be done by early next year at that rate. The markets would react accordingly, where interest rates would probably spike up as anticipation of future rate hikes would spike in terms of when they're going to come next year. We're even hearing potentially as early as March of 2022, you could maybe see an interest rate hike. Now, again, as of now, the markets had a beautiful bounce last week. It was a really nasty week prior to that, and then a strong bounce back week last week. Now, the big question on the chart here is, can we take out the short-term high here on the SPY, which is around 473.50, 55.60, right around here. You can see it right up here at the very top. That is going to be something that I think every investor and technical trader is going to be watching this week. All right, so we will be watching that. I will be watching it. Again, we're coming into kind of the Fed meeting, and then after the Fed meeting, we're going to get into the holiday kind of sessions where we get close to Christmas, and then we have that week between Christmas and New Year's. So again, that's going to be very, very interesting to monitor how the markets trade there as well. All right, on the QQQ, kind of the same general thing. It is a little bit further away from the highs here that we put in with that epic reversal day. But nonetheless, we'll see if we can break out above short-term resistance. You can see short-term resistance is right here, right around 400.5. That, again, is a level we hit last week. We then hit it kind of the week before when we were at the highs. And then if you go back here, we were right at that level as well. So right here, and right here, all into that 400.5 level or so. And each time the market getting rejected from getting through there, if it does get through there, that's where you start to potentially see a test of the recent highs, the all-time highs on the QQQ. All right, I think if you look at the overall market and you scan stocks, you're going to see a majority of stocks are in bear market territory already. The leadership role that has been carrying this market is basically a handful of stocks. Again, mostly the big cap tech like Microsoft and Apple. Those are the ones that are carrying things, essentially single-handedly, if you will. And then if you look at, obviously, stocks like Zoom and Peloton, which are kind of not reopening plays, they haven't done great. But even reopening plays like Boeing and American Airlines, they've really been struggling quite a bit. If we take a look at AAL here, you can see, again, look at this. If you zoom out on that chart from where it was going back in earlier this year at $28 a share or $26 a share up here, you're trading at 18. That's a huge drop percentage-wise from those highs, and that's a reopening play. Same thing with Boeing. If you bring up the Boeing chart here, BA, you have that general same kind of thing. Boeing, again, made a high earlier this year in April of 279, and we're sitting here at basically just above 200. So, again, huge percentage move off of those highs. And then even if you go to some of these kind of secondary hot plays, like DraftKings was insanely hot at one point earlier this year, trading north of $70. It's now a $30 stock, an over 50% drop. You can look at other names as well. Even Zillow. We know Zillow had that ridiculous run. Now look at where it's currently trading. So what this tells us is that overall, there's a handful of stocks that are carrying the market, and a majority of the stocks are in, honestly, bear market territory, potentially signaling that if the big names start to wither or falter, you could be in for a rough move into the new year, into 2022. All right. Looking at the futures here, S&P futures appear to be up about 6 points right now. Dow futures up 43. Looking at oil, oil's up 20 cents. Natural gas is having a nice day. This is a real nice day, folks. If nat gas can hold its gains, we should have a great gain on oil tomorrow that we can take off the table. Nat gas is up 2.5%. So hopefully that does hold into tomorrow. Gold is pulling back just a shade, down $1. Silver's up 2 cents. Copper's up a couple cents as well. I would say in the commodity area, natural gas is the standout, which is trading up very nicely just around that, just underneath that $4 level. All right. All righty, guys. Let's get into some questions on this fine evening. And as I always say, I do hope everyone had a good weekend. It's always good to recharge that battery and, go from there. All right. First question from Jonathan saying, I saw that Chegg this week was back down after a downgrade of price target to 38 from Morgan Stanley. The short interest is now over 25%, and there's been shady, huge volume in it after hours each day. With short interest so high, is that usually seen as a bearish indicator or the possibility of a huge snapback when they cover? Can you share your expertise? Sure. So anytime you have big shorts in a stock, it means at some point you're going to have big buyers, right? So short interest is actually one of the things that triggered AMC to make that epic run. GameStop, we know about GameStop and the hedge funds that got caught off sides. So having high short interest is not necessarily a bad thing. In fact, it means that there will be buyers at some point as you start to see those shorts cover. Now, again, overall, it doesn't mean a whole lot to me. What I'm looking more at is the chart itself, the chart on an intraday basis. And I think that's really the essence of it. So you don't want to look too much into it. What I like about the chart right now is you might have a cup and handle pattern. I'd like to see it hold here sideways and then start to break up again early this week. If that's the case, then you should go up to, my guess is probably around $34 to $35 short term. If it gets through that, then you're headed up to about $39. But again, overall, upgrades, downgrades don't mean a lot to me. Short interest, again, I usually view short interest as a net positive if the chart is good, because then if the chart starts to play out, it usually creates a short squeeze. So that's really what you want to do, but you always want to focus on that chart number one. All right. Anthony saying, what do you think of CFVI, CF Acquisition Corp, for a swing trade? Sure, let's take a look at that. CFVI. I got nothing on this. Looks like a whole lot of choppy action, which again does not give us a good bias based on any price pattern or time formation. So yeah, I would just leave it be. Again, you don't have enough trading history with all this kind of nonsense down here, and then you just got really whippy stuff up here. So yeah, honestly, I really couldn't give you much on this chart. Graham saying CRSP has dropped significantly back down to historical levels, previously set in May 2018 and December 2019. Is it worth buying at these levels? Let's take a look. CRSP. Yeah, I see. It has really come in significantly. I like the support that it's kind of hammering at right here. So this pivot area right here and this pivot area right here, that's good support. I also like, interestingly enough here, one of the things I like is that you could be making an inside bar bullish pattern in the short term. So again, you'd want to follow this pattern a little bit more. It's right now a very amateur pattern. It's not a pattern that is fully developed, if you will. It's what we would call an immature pattern. But if you continue to go sideways over the next couple days, you'd start to make an inside bar bullish pattern off that little reversal. Considering how much the stock has been discounted, that would get me interested slightly if that did occur. So yeah, I mean, it's not something I would buy tomorrow morning at the open, but if it continues to kind of go sideways to a little bit lower, and it continues to kind of hold up and create that pattern, yeah, I would absolutely take a look later in the week at that one. Landon saying, are you looking at any attractive levels for beaten down high growth innovation stocks ARKK? Yeah, so I was taking a look at ARKK here, which is the ARK Innovation ETF. You can see it had this monster bounce, but then really it started to crash back down. If you're really aggressive, you could try to play this gap fill at $95. So 95 will be a quick level to trade, maybe for a day or two or maybe a couple days. But ultimately, I'm still thinking this is going to go even lower, folks. If you look at the longer-term chart, look at how overbought it still is. Even with the drop that it's seen, and even from the drop from the all-time highs, it still had a ridiculous run to the upside. So for me, the level I'm eyeing is around $80 to $82 right in here. There's going to be a significant amount of support. That's only a swing trade level for me. Eventually, I think it's going all the way back to here. Now, this down here would be kind of a longer term accumulation zone for me, and that's all the way down at $61 to $60. So, yeah, it should be interesting on this one. Again, the gap fill would be a real quick trade. This level down here, the second level, these two blue lines here, that would be a swing trade, so you could probably hold that for a couple weeks for a bounce. And then this one would be your longer term trade where you'd get in and hold it maybe for months or even longer potentially. Okay? Natasha wondering about Home Depot. Let's take a look at Home Depot. So Home Depot has continued to stay relatively strong near these highs. Looks like you're starting to get some sellers up at these levels. You had this topping tail here, then it tried to break out. And what's interesting about this, folks, is take a look at this. This is actually fascinating. This topping tail is still actually valid based on the technical definition of a topping tail and when it fails. And so if you look at this high of this topping tail, you still have not seen any candle close below, or excuse me, close above that high. You pierced it here, you almost closed above it here, then you fell back down, now you're moving back up. But I think that's fascinating, if you know how to read topping tails, to note that you haven't actually negated that topping tail, even though you've pierced that high so many times, and even though you've traded in this range for so long. Kind of interesting, worth kind of keeping an eye on. Robert saying Ethereum broke out of a big multi-month cup and handle pattern that began developing in May and is currently backtesting the scene of the crime. How likely do you think it is for Ethereum to reach its projected price target? Wow. So let me take a look at Ether here. So, to be honest, I don't honestly see that breakout, honestly, I don't really see that breakout, at least on the daily chart. What I do see here is you have this support from this pivot, which is keeping price in check. And then you have basically this high right here. So you're still trading, ever since you got above here, you're now trading in a channel, ups and downs inside of basically the highs here around 4,800, and then the lows would be around 4,000 or just shy of 4,000. So for me, it's just kind of a chart that honestly hasn't made up its mind. It's consolidating in the upper range, which is slightly positive, but at the same time, if it ever breaks below this line, that's where it starts to have a bigger drawdown, likely to 33,000, maybe 3,500 or so would be a little bit of support. But yeah, I mean, for me, it's kind of just a chart that's still staying inside of a range. It's still range bound and doesn't get me too excited at this point. Bitcoin had a little bit of a float up over the weekend, trading back above 50,000. That's actually been in a very tight range as well. Although I still think there's a little bit of upside on Bitcoin to 53 to 54,000 before it kind of puts its next high in and then starts to dump out again. All right. Navjeet saying, just wondering in general, how does the biotech stocks perform in today's market environment? Yeah, I mean, you can always just look at the IBB, right? So the IBB is the biotech ETF, and you can see the biotech ETF is actually trading just off of support, big support level here. Take a look going all the way back to 2020. The highs here, high here, then it broke above, and then look at how that line then became major support. And so as long as that line holds, it's okay. It does concern me that we're trading just above it and we've hammered on it so long. It does make me wonder if it's going to break lower. There are some biotech stocks that are intriguing to me in terms of valuations, but it's important to recognize in bear markets, the valuations on biotech do go lower. So if we are by chance entering that bear market territory, you would expect the biotechs to even trade lower in the near term on that. Okay? Let's take a look at Apple here. So take a look at AAPL. So Apple, so basically what's going on with Apple is it wants $3 trillion in valuation. I talked about this on Friday in the daily analysis video. That's really all that's going on. So I fully expect it to open at $3 trillion tomorrow, or at least in the first 30 minutes, it probably hits it. I think you're at $2.95 trillion in valuation. So you're so close that you got to expect that to happen. So anyways, that's really what's going on there. It's kind of a push for that $3 trillion valuation so the media can have their pom-poms out and go nuts. And then, honestly, that's where I expect it to start to pull back. I'd fully expect you break it maybe for a day or two, and then all of a sudden the buyers dry up, and then you start to see the sellers come out of the woodwork. So that would be what I would expect, and I think that might have an impact on the market as well. Depending on if it opens up there, could we see the market start to sell or maybe on the Fed, and then Apple actually could lead the market down in that respect. Okay? Let's take a look. Nerdy wondering about AAP. Let's take a look at AAP here. Advanced Auto Parts. Yeah, so Advanced Auto Parts here, it's a nice bounce recently, but you still haven't taken out the short-term high. So really all you're seeing here is a lot of chop. Really nothing that gets me excited one way or the other. Doesn't look like an amazing short, doesn't look like a good long either. Just kind of chopping around, okay? Avi saying, hope you had a great weekend. Thank you for your services. Possible technical analysis on Nikola. Thank you for the previous analysis. It did go sub 10, possible buy range. Yeah, so the tricky thing with Nikola is that you have to, ever since there was kind of that fraudulent stuff that the CEO was doing, it was discovered that their trucks basically were just put on a downward slope and just basically rolled down a hill. I've been very, very careful with that name because I don't know what technology they actually do have that's legitimate. Now, they may have it, and they very likely do based on a $4 billion valuation, but I'm just not super clear on it. Having said that, I'd also be careful considering that the EV stocks and alternate energy stocks are starting to crack. So if we look at Tesla, right? Tesla's continuing to kind of hammer on this area of support right now here. And then if it breaks lower, you're going to fill this gap. And I do think that Tesla eventually comes back in this range as well. So if you start to see the EV sector start to crack a little bit in terms of money, then I would be also fearful that Nikola would start to go a little bit lower. It's very possible that Nikola is not worth more than $1 billion market cap, unless we start to see something major on it. I think it's just getting lifted like a rising tide lifts all boats in the EV sector. You have Lucid, you have, Rivian, you have Tesla, you have Ford, you have GM. All these stocks have just been so strong for so long. Eventually, things are going to crack there. And if you're going to invest in EV stocks, go with something that's closer to best of breed versus Nikola, which, the valuation, again, is pretty lofty for almost having nothing, according to what I'm seeing. Stefan saying, do you see a double bottom on Bitcoin forming? Not really at this stage. At this point, you wouldn't really consider the short term here to be double bottom. Double bottom is a very important educational piece. There needs to be space between them. When I say space, on a daily chart, you'd want like a month between them at minimum, maybe more. So like if we came down to this level, this 40,000, you could say, okay, well, that's a double bottom. It was a fairly long time ago that we were at that low. Then you ran up, and then you came back in. The price action over the last couple of days, in terms of the lows here, there's definitely support there. But again, I would not classify that as a double bottom. Having said that, like I said just a little while ago, I do think there's a little bit more upside in Bitcoin to about 53 to 54,000. Then I have the chart telling me that it likely turns lower again. Daniel saying, Sox, what's the plan? What levels are you planning to add? Yeah, I'm just kind of waiting out to see what the semis are doing here, and then I'll decide if I want to add. The beautiful thing about the Sox is that you get any sort of nice little fall in the semis, and that thing rockets like nothing else. So there's really not a lot to do. I am intrigued about adding, but I have to see the right things occur in the semis charts to do so. One of the things that is popping up is NVIDIA was very weak on Friday, again, considering how strong some of the semiconductors were on Broadcom earnings. And we saw some earlier news in the week on Intel. My guess is it might be an issue of competitors taking some of NVIDIA's business. Maybe that's why it's been a little bit weaker versus maybe overall weakness yet in the semis. But eventually the semis will have a big crash as well. Okay. Chris saying, would anything change your mind on shorting Apple, or would you look to add to your short? Yeah, I'd potentially look to add a little bit to the short. Nothing's really going to change my mind based on the fact that it's trading at a 30-plus PE ratio, the fact that it's extended. As soon as you get in a bear market, that's going to be cut in half. You'll see, Apple trading back below 100. Okay, let's take a look at BHP. See what we got there. Yeah, BHP is just kind of hovering at resistance here. We can erase this former trend line here. But you can see right there, that's resistance. I'm still in this trade. I still think it's going to break above this line and then head a little bit higher. So I do want us to hold this and look for further upside on that one. You're welcome, Jonathan. No problem at all. All right, next question coming. David saying, are Wall Street bonuses tied to the year-end stock price? If so, is this why we almost always get a Santa Claus rally? No, not necessarily. Again, bonuses are tied to profits generated by funds, which doesn't necessarily have to be tied to stock prices, although it's certainly, generally, most hedge funds are long, so it will partially be tied to that, or you could make a case for it at least. But bottom line is, Santa Claus rallies are a combination of euphoria by investors, light volume in the market as the big institutions go on vacation for the second half of the month. Stuff like that, So again, when you have the institutional investors leaving, and you leave it to the smaller investor who generally is net positive. In fact, if you ask about 10 investors at random on the street, I would say 7 of them probably have never shorted a stock in their life. So what does that tell you? It tells you that the bias for small investors is always on the long side, right? That's what the media does. The media very rarely encourages anyone to short anything. They are always saying, oh, buy this, oh, but this area, let's go buy this. So that's why you get the Santa Claus rally. It's kind of that euphoria, the Christmas spirit, if you will, and then the lighter volume with the big traders away and the smaller investor kind of buying into it. Having said that, the Santa Claus rally, I'm skeptical on it personally. Every time people are telling me that it's 100% going to happen, I'm always skeptical, especially in this day and age with the Fed tapering. Just a good example would be that 3 weeks, 4 weeks ago, everyone was saying, oh, this is going to be a huge Santa Claus rally, and then the markets ended up having a big dump. Now we've recovered some of that, but the question is, do we start to trade back down, or do we still go up? I'm still potentially seeing the technical chart saying we have a high in place. Okay? Let's take a look at this. Let's see here. Yeah, Kurt wondering about potentially offsetting some gains with some losers. I could do that. I've thought about doing that with a couple positions. There's no sense in paying more taxes than you need to do that, than you need to. So I was hoping we'd get a big pop in VXX and then just unload it, and even taking a loss on that would be fine to kind of offset some of the massive gains for the year. So it's a possibility, but the thing is, you don't want to get out of a position just to get out, and then January comes and all of a sudden that position makes a big move in your favor. So you have to really pick and choose carefully on that, Kurt. Okay? Let's see what else we have here. Brian saying spiders have hit 470 level a number of times. Is that a bullish or bearish? So let's take a look at 470 here. Yeah, so that's the level we were talking about right up here, right up in this range. Yeah, so the more you hammer on a level, technicals say that the weaker that level becomes. So again, wouldn't shock me to see us head up a little bit higher on the spiders. You can see we even closed just above 470 on Friday, which might mean we go up and try to test this high right here. But yeah, short term, it's not the biggest of levels. It's a decent level, but it's not like an epically big level there. And it does look like the market closed back above that on Friday. All right. Greg saying, over the next 2 weeks, what ETFs or other trade vehicles do you believe will have the best risk-reward trade? Do you suggest we wait after the Federal Reserve meeting, or can you tell by the charts right now the direction? So basically, what I've learned throughout history is you trade the charts, you don't trade the news. If you trade the news, you're always last in versus being first in, and you always want to be first in because usually the last in are the ones that lose the money. So just follow the charts. I'm never one to say, hey, I'm going to wait till after the Fed decision to make a determination on buying gold or buying something else, because by the time the Fed makes the decision, then gold's going to make a huge move in the direction that you likely saw or you thought was going to go because of the chart setup. So just ignore it. Yes, it's going to cause a big move, but ultimately, if you're reading the charts correctly, it should be generally in that direction. Okay? Jariel saying PANW. Sure, let's take a look at PANW here. Little Palo Alto Networks. So Palo Alto Networks, not really much on the chart here. Maybe a little inside bar bearish pattern here, but certainly not a good angle. So I wouldn't classify it as a great trade setup. Looks to me like you have somewhat of a, maybe a parallel channel here that it's trading in like here, so you can see right here. And so as long as it stays inside of that range, then you're fine. It's just going to kind of chop around. If it starts to break lower, then you have a lot of downside. There's a gap that eventually will be filled around 373 all the way down here, which is significantly lower for sure. Okay? Anthony saying, is the 2-year Treasury yield versus the 10-year important to watch? So the spread between the two of them is important to watch. That does impact the markets. There's no doubt about it. So you do want to pay attention to it. By itself, the 2-year, I couldn't care less. The 10-year is really what I watch on a daily basis. But the spread between the 2 and the 10 is important because it does tell us about the prospects for the economy, and it does move the stock market a little bit, absolutely. Doug saying, January effect been making small buys on pot stocks, ACB, CGC, and Tilray. Your thoughts? Yeah. I mean, I'm in CGC myself. Tilray filled the gap that I've been waiting for about 8 months. Because I'm in CGC, I didn't feel like I needed to pick up Tilray at this point. But yeah, I love Tilray, ACB, CGC. Like I think I explained it even last week, we talked about it, is that at these levels on these marijuana stocks, at some point you're going to hear buzz about it. In fact, I wouldn't even be surprised if once we get into mid-year next year ahead of the 2022 midterms, if it becomes a hot topic, the legalization on a federal level. And again, if you think about it, the Democrats have to some way energize their base. Potentially talking about legalization of marijuana at a federal level could help do that for some of the more left-leaning Democrats. So, again, the beauty of it is for us is we just play the charts, and we know that these levels have been hit on the marijuana stocks. We know that eventually legalization will come to pass, and ultimately, when it does start to get talked about, those stocks will have a big move. At current levels, could you be down 10 or 20%? Yes. But ultimately, when that stuff starts to be talked about, they'll run 50, 60%, and you should be able to make very, very good money. Okay? Let's take a look at LSPD here, see what we got on this one. So Lightspeed. Yeah, Lightspeed's another one that's been absolutely crushed to the downside. So the first thing I see is a gap down here. So that would be what I would wait for. There's a gap fill at around $35 or just below 35. So you can see it's had a bounce, and now it's coming back down. My guess is it'll break below that and eventually head towards 35. And then I think it looks very interesting at that level. Basically negates the entire massive move up to the upside. And looks pretty interesting. Take a look at Costco here. Yeah, Costco had that big move on Friday. Notice it went right up to a perfect double top. Really, again, remarkable how this stock has a forward PE of 40, yet somehow it still is finding buyers. Now, granted, they did report earnings, right? So they did report earnings, and the earnings were decent. But again, you'd argue, at least I would argue, that how do you justify a retailer, even Costco, which I'm a big fan of, having a PE of 40 plus? And my guess is as soon as you get into a more conservative market, PE ratios on something like this are going to be cut in half, and you'll see Costco trading at $250 versus $550 essentially. Okay. Daniel saying, why do some traders say that only horizontal lines matter when trading and not diagonal? I don't know. I don't know. I mean, to me, honestly, I don't even know if there's anything. To be honest, I couldn't tell you. It's not my methodology. My methodology is that a trend line, depending on how many hits it has, it determines how significant it is. So yeah, I don't know. I've never heard of any traders saying that. Although, listen, there's a lot of nut jobs out there. I'm just going to be honest with you guys. The bull market has created so many people that think they're geniuses because they can make money in a market that has generally just gone up. No offense to Cathie Wood, but I wouldn't be surprised if when the market actually starts to behave more like a bear, I'll be curious to see how she performs. I give her all the credit in the world because she has monetized her brand and her names and has ridden hardcore the move up. So, I mean, there's a lot of credit to be given, but I want to see performance in a bear market. Can she adapt? That's the thing. In bear markets, I make just as much as in bull markets. I mean, in fact, arguably more in bear markets because you get more volatility. You got to be able to do it in all markets to really be a good investor and trader. And most people can't. Most people can't because emotion is sharper in fear periods during bear markets. Okay? Oleg wondering about Roku. Let's take a look at Roku here. See what we got on that. That had a big move early last week or mid last week, then started to come in. Yeah, you could easily look to buy Roku at 217 here, and then a little bit more right at this gap fill as well. Nice little retrace. See if it comes back in there, and then just keep your stop below that low pivot right there. Okay. VJ saying with CPI at 6.8%, which is the highest in 41 years, golden miners didn't do much or move much last month. Last week was brutal for miners. Good time to add more to gold miners. Well, remember, so I picked up gold miners last week, I believe it was, and I think we're basically slightly in the money on them at this point or right around there. So I did start to accumulate last week or a week ago or so. Having said that, the markets are weird. I've been using history to kind of dictate when gold and when gold miners are going to move. And if you look at the mid 70s, right? So we know that we had the biggest inflationary period from like 75 to 85, 1975 to 1985. And if you look at gold and its performance from like the mid 70s to the late 70s, it did almost nothing. It went sideways basically. And yet you had crazy inflation. And then it was the late 70s into the 80s where gold started to rip higher. So I wouldn't be surprised if that's what's going on here, is you kind of are getting this consolidation period. You probably have big money starting to accumulate this stuff. They don't want to let it run until they fully have their mega-sized positions, but inevitably you should see a massive move up in gold, and I would treat it as such. I mean, again, I've bought physical gold that I just am tucking away as an insurance policy. Obviously, we're long the GLD. I have some Newmont Mining. I got some GDX again. Now, those are more swing trades, but ultimately the angle is, to me, at least the upside. Okay? All right. Newbie question for Steven saying, what percentage of your portfolio should a typical trade be? So again, every time I give out my trades, guys, I put the approximate percentage that I'm doing. You can either choose to go by that or you can choose to do your own thing. The reason I usually start 1% on like a mid cap, large cap, small cap. Maybe a small cap would be 0.5% or 0.25% since those are super risky. But what I'm always doing is I'm trying to dip my toe in the water. This is one of the best techniques. It's actually improved my profitability, believe it or not, significantly since starting to do that, because it essentially is it's something the market humbles you over time, right? I've traded for 20 plus years, and you start to realize that as much as you think a level is great, the market, if it's fearful and you're buying a stock that's falling, it can go through that level by a significant margin. By leaving yourself the ability to accumulate more, it gives you that great opportunity to get a better average before the snapback does occur. The snapback inevitably occurs. You just want to have the best average possible. So a great example last week was STNE, right? So STNE, we picked up once. It went lower, picked it up again. Boom. Then it shoots up. We made some great money last week. We did kind of that same thing with Chegg as well. Still riding that at this point. But ultimately, that's the better mentality. So again, that's why I pick up small starter positions, because it gives me that flexibility. You can, again, decide if you want to do that, or you could do your own thing totally. Landon saying, what's your process to stay patient and not add to positions too early? Yeah, so I mean, again, I think it's that same kind of thing. Number one is the charts really are your indicator. So, you buy something and you're down 20 or 30 cents, let's say it's a $50 stock, you have to ask yourself, if I add to this position when I'm down 20 or 30 cents, and I'm using this as a hypothetical, does it really affect my overall average? And if the answer is no, yet you're doubling your amount that you're buying. So if you start at 1% and you add another 1%, you're doubling your position, which is doubling your risk, but you're not getting a benefit from it, right? The whole idea is if you're going to double your risk by doubling up from 1% to 2%, it needs to affect your average price and give you that benefit to correspond to the additional risk you're taking. So that's really an important one. So that kind of makes me be safe on it. And honestly, just from the stocks that we're watching, I mean, look at charts like Zoom or Peloton or, any of these, Chegg, STNE. I mean, we could go through a bundle of them. Boyle, I mean, Boyle, just insanity there. But hopefully we can close that one out tomorrow for a big gain. But these stocks move a lot. You don't want to, you got to let these things breathe a little bit. And I think over time of just seeing it over and over again, and because I've been trading for so many years, you just get accustomed to saying, all right, listen, if you're down 50 cents, that's nothing. That's a intraday move. You got to let it go low enough before you add to that position. Be patient. Look at the chart. Let the charts dictate. Don't listen to the media. When the media is uber bullish, it's probably the time to short. When the media is uber bearish, it's probably the time to buy. The best example of that recently was natural gas. When natural gas was trading at these crazy levels, and you could see on the UNG when it was up here, I mean, the media, CNBC, I still remember flipping on the TV in the morning, and they were talking about shortages in Europe, and prices were crazy, and it was the dead top. And we actually bought the inverse. We went short natural gas multiple times over that period and made a lot of money. But again, the media has a tendency, not the fact that, to be honest, they're not doing it with any malice, right? What they're doing is they're trying to report the news and get you interested. They want to make sure you're watching. Because remember, financial news doesn't make money by reporting financial news. They make money by selling spots, TV advertisements, right? So remember, that's their goal. So if they can report something crazy and get you all hyped up and fearful or greed and the emotional response, you're more likely to watch, which means that then they can sell. They have better TV ratings, which then means they can sell more TV ad spots. So their motive is to sell more ad spots while your motive is to get good information. Those are conflicting. And again, so they're doing what they're doing to try to make money so they can stay in business. You have to recognize that. So when you see that crazy bullish or crazy bearish fear, you have to be able to step back and say, okay, I understand why they're doing this because they're trying to get us to watch. That doesn't necessarily tell me to go short or long a stock. All right, so good little tidbit there. I think we'll end on that note tonight, folks. Just doing a quick check of the S&P futures here before the end of the verified live broadcast. We're still up 6 points on the S&P. Oil up 24 cents. Nat gas still trading up about 2.5%. Gold flat. Silver up a couple pennies. So yeah, pretty quiet in the overnight here going into tomorrow. I do expect quiet action because of the Fed this week, so just be understanding of that, at least early in the week. Then we should see some fireworks later in the week with the Fed. Have a great one, folks. Great to talk to you all. Take care. Have a good one.